This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index currently trading at $50,903. Bitcoin is up about 3.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin may not be able to build on the relief rally as it heads into the year end, according to CoinDesk's Omkar Godbole. A key indicator, a technical indicator, the weekly MACD, has flipped bearish with a sell signal for the first time since April amid heightened macro risks. The MACD histogram is a technical indicator used to identify trend reversals and trend strength. Fairlead Strategies telling CoinDesk there's room for a further sell-off to a point where Bitcoin starts looking oversold in the intermediate term. The MACD's dip into negative territory implies a bullish to bearish trend change. Deeper bars below the zero line indicate strengthening of bearish momentum, while Bitcoin has bounced almost 20% from Saturday's low of under $43,000 per Bitcoin. The cryptocurrency has yet to retake the bullish trend line from July lows reached last week. Lingering Fed jitters, Omicron fears, and China property market concerns indicate limited upside in the short term. According to Fairlead Strategies, the recent rebound in the crypto markets could be fleeting, with upside likely to be capped around resistance at the $55,000 level. Joining us now to discuss is Nick Mancini, research analyst at sentiment tracker Trade the Chain. Hello there, Nick. Good afternoon. So we did see a huge sell-off over the weekend, a big rebound right now. What's your outlook on Bitcoin?
Yeah, so thank you so much for having me. The current outlook is currently more or less neutral. I don't think anyone is in a position to really say bullish or bearish right now, but the sentiment and the retail kind of outlook right now does appear to be picking back up towards levels that we saw, let's say, pre-drop. Pre kind of correction. So right now, everyone's more or less in a wait and see period. Volume is still 5% lower than our monthly average, but Twitter volume is actually up 11% on our monthly average. So generally right now, what we're seeing is people are interested in Bitcoin at these prices, but I do believe and agree with many others that there's the potential for a dip. So I think that there's a lot of chatter and not as much volume as we would like, therefore implying we could see a small drop. But I do believe, based on the sentiment that we're seeing, is that any sort of drop back to levels that we just saw into let's say the mid high 40s will likely be eaten up quickly given the level that we're trading around. As you can see on the chart right there, the 50 moving average is what we've been hovering over for most of 2021. So coupled with that and positive sentiment, as long as volume comes in, we should recover well. But again, it's not a 100% guarantee right now.
How does Bitcoin sentiment compare with Ethereum?
Fascinating question, because Ethereum sentiment is quite is more bullish than Bitcoin right now. So what we saw yesterday, and you're looking at the Bitcoin sentiment chart, but with the Ethereum sentiment chart, we actually are near bullish levels of around 40 or higher. 60 or higher. So right now, Bitcoin is flirting around the 50 range. Ethereum is into the 60s, which means that it is confirmed officially bullish from a wide scale sentiment perspective. So it's very interesting to see Ethereum's price recover a little bit more stronger than Bitcoin's as well, considering that we see that sentiment correlation moving forward. So Ethereum Twitter volume is actually higher than Bitcoin's as well, which is worth mentioning, just given the chatter that we're seeing. When everything kind of capitulates or resets, however you want to discuss it, large caps tend to get the inflows first. So it's good. It is a good sign that we are seeing Bitcoin and Ethereum gather the most kind of sentiment and Twitter and chatter interest, because generally what happens is if those start to recover, then we begin to see confidence move over into altcoins and other assets.
So according to some of our CoinDesk analysts, especially before the weekend, there was concern that the markets were over-leveraged, and this pullback is because there's been some deleveraging going on those Bitcoin long positions that are shaking out. Is that open interest for Bitcoin derivatives coming back, in your opinion?
Yes, so the charts that we're looking at right now, we saw about a 29% drop from the second to the fourth. So just a few days, we erased over a quarter of open interest just in the Bitcoin's market. And fascinatingly enough, on the fourth, we had a 15x turnover rate on Binance and a 17x turnover rate on Prime XBT, meaning that we saw 15x the volume of the open interest of the whatever the open interest numbers were. So I believe that was a $250 billion volume day just for derivatives on December 4th, which is absolutely fascinating because you're seeing so much kind of get removed from the market. Other people are making massive amounts of money. So you're seeing a reset, as I like to call it, for a very important market for Bitcoin's future. Clearly, the institutions and some of the large scale traders like to make big bets. They prefer this market over the spot market or pair them together for their trading strategy. So to see the derivatives market quickly picking back up and gaining some of the billions that were lost in such a short amount of time is very positive. So you want to see that correlation with derivatives volume and spot volume both increasing, because if there is a disconnect, then that can spell massive amounts of volatility incoming for the market. So we're looking healthy, but again, nothing is perfect as I'm seeing it now.
So Nick, we talked about Twitter sentiment, which I linked to retail, and we've just looked at open interest, which seems to be more aligned with institutional. So how do you compare retail versus institutional sentiment right now in terms of their interest in Bitcoin?
Yeah, so interestingly enough, there's no way to get real-time fund info. Everything that you get is always going to be behind some sort of black box that no one's going to give you all of that. But looking at this quarter's fund flows, now that we're starting to wrap up, some data starting to trickle in Q4, fund flows were still up in terms of Bitcoin and Ethereum. So the fact that people are still buying during the dips, during rise ups, we have had more or less a bullish Q4. To see more money come in and continue to come in is very positive. That there's no way to directly tie it, but I will say institutional always watches retail. So if retail is giving the signal of bullish, that could mean one of two things. Either institutional will float that trade, crowd that trade, and create an opportunity for more volatility later, or they will attempt to play off of euphoric feelings and dump prices further. So I think what you really need to look at is, if you're thinking that the institutional crowd is thinking these types of thoughts, is derivatives open interest rising or falling? Are more people placing bets or are they placing less? And then the final step is, where are those bets being placed? And I think one thing that we didn't discuss but is worth mentioning are options. So if most of the options are calls for above 100 grand by the end of Q1 2022. So if more people are placing bets continually on a bullish future rather than a bearish, that implies an institutional more institutional bullish outlook than bearish. So that's how we try to compare everything from what is retail seeing, how does institutional react, and then where do we look for the signals in which institutional puts their money so that we can make our predictions. So that's kind of how I'm looking at it. And I am still bullish going into 2022, although I do admit that we will likely see some serious volatility likely within the next 14 days.
All right, Nick, thanks so much. I heard end of first quarter 22, $100,000 Bitcoins. Yes. Is still very bullish indeed. Thank you, Nick, for that analysis. That was Trade the Chain research analyst Nick Mancini. Coming up, the Badger DAO hack and how it made 2,100 Bitcoins disappear.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination, in the form of cultural creativity, is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
Welcome back. Time to look at some of our top stories moving markets. The Indian government's proposed crypto bill may bring about tougher measures, including arrest without warrant and stricter jail terms for rule violators. Reuters reporting the government is planning a general prohibition on all activities by any individual on mining, generating, holding, selling, or dealing in digital currencies as a medium of exchange, store of value, and a unit of account. The draft bill has not been presented to the cabinet yet and will have to go through Parliament before becoming law. Meanwhile, El Salvador's dollar-denominated debt has taken a beating in recent weeks, with observers blaming President Bukele's plan to issue Bitcoin bonds for the sell-off. While Bitcoin bonds are a contributing factor, analysts point out it's not the only one, with Salvador's bond spreads widening in general. Nevertheless, with Bitcoin bond sale proceeds going toward purchasing more Bitcoin, experts warn that things will only get worse if Bitcoin continues to decline. All right, and wrapped Bitcoin, an ERC20 token on the Ethereum blockchain that is collateralized one-to-one with Bitcoin, has more than doubled its supply from a year ago, as traders and investors seek alternative high-yield opportunities in decentralized finance. But the hack on BadgerDAO, which focuses on high yields on wrapped Bitcoin, has raised concerns around the security of moving Bitcoin to the Ethereum blockchain. The hack led to the loss of 2,100 Bitcoins at an estimated value of over $100 million, according to China-based blockchain security firm PeckShield. Joining us now to discuss is Esteban Castaño, CEO of blockchain intelligence firm TRM Labs. Hello there, Esteban. Thanks for joining us. So the BadgerDAO hack cost users about $120 million in cryptocurrencies, including that 2,100 BTC as well as 151 ETH. What happened?
So in that particular instance, the attacker hacked the website of BadgerDAO so that when a user tried to send funds to BadgerDAO, it actually sent funds to the attacker's own wallet. Now, this type of attack isn't new. We've seen this, we've seen similar types of attacks with phishing sites where attackers will try to impersonate the organization that the victim's trying to send funds to, and then the victim will send funds to the attacker themselves. We've also seen it with mobile phones with malware, that when someone is looking to execute a transaction on their mobile phone, it will automatically replace the destination address with the attacker's address, and the victim will send funds to the attacker. So this isn't new. I think what is unique is that in this case, the attacker wasn't just posing as BadgerDAO, they actually compromised BadgerDAO's interface to execute this attack.
Mm-hmm. Can the wrapped Bitcoins stolen be tracked, or are they gone?
They can, and they are, and we are tracking them. So the wrapped Bitcoin was converted to RenBTC, which is another form of tokenized Bitcoin, and was converted into a Namecoin on the Bitcoin blockchain, and we're monitoring that Bitcoin currently. So is there any hope of recovering funds? There are. What TRM does, we're a blockchain intelligence firm that analyzes blockchain data and packages those insights into web applications and APIs that help financial institutions and governments investigate and detect exactly this type of activity. So an exchange, for instance, using TRM, they would be able to monitor if an incoming Bitcoin deposit was sourced from the BadgerDAO hack. On the other side of the coin, a government agency, a federal law enforcement agency, might be able to use TRM to visually, trace the flow of funds on the blockchain and ultimately understand, what other services the attacker is using and close this case. Is wrapped Bitcoin bad for Bitcoin in the sense that it's not as secure? It's security risk putting it onto the Ethereum blockchain? Well, in this case, it wasn't a vulnerability of Ethereum necessarily that led to Bitcoin being seized. I mean, this is a web interface that got hacked, and it said, hey, send funds here to interact with my service, and the hacker replaced it with their own address. So this isn't a vulnerability of the blockchain, or doesn't speak ill of wrapped Bitcoin or Bitcoin as a digital asset in and of itself. Mm-hmm.
Finally, the Craig Wright versus Climate Estate case has settled. Wright was victorious in all but one charge of conversion. It wasn't proven that he was Satoshi, but he owes $100 million to a company jointly owned by him, Kleiman, and his ex-wife. There will probably be more litigation on ownership there, but any chance of tracking Satoshi's wallet addresses and getting more hints as to who Satoshi is or isn't, for that matter?
Well, I can't speak to that case for obvious legal reasons. But obviously, Satoshi's wallets are visible on the blockchain, and so you can trace and understand the activity of those wallets and use that to derive your own conclusions.
All right, so no luck there. All right, and finally, TRM Labs has just raised $60 million in a second round of funding. Congratulations. At what valuation? What do you plan to spend the money on?
So we're investing in three primary areas. Number one is the asset coverage. If you're an exchange, you need full coverage of the assets on your platform, and TRM has by far the largest asset coverage, both across tokens and blockchains in the industry. The second is the data. These infrastructure tools are only as good as the data. TRM offers the most reliable data on and the most complete view of risk on blockchains, and so we're continuing to invest in our data science and our threat intelligence function to have the best view of data. And finally, it's the go-to-market, investing in customer success so that our customers continue to receive the world-class customer service that they're used to.
Are you able to say your evaluation now at TRM Labs?
We haven't made it public, but it's exciting.
All right, congratulations, Esteban. Very exciting stuff. That was TRM Labs CEO Esteban Castaño. Thanks for joining us. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 p.m. in New York. Join us tomorrow morning as well at 9 a.m. for First Mover. You're watching CoinDesk TV.